When is working with a mortgage broker the right fit for you and for your clients, and when is it not? I got in the mortgage business back in 2011. I was a naive, ignorant 23-year-old. I never bought a home before. My mom basically bought me a home. I was a co-signer, so I owned a home, but I was not an involved home buyer at the time. And here I am in the mortgage world. And I'm so excited to provide customers options. I get to shop around and get you the best deal. I love this idea and concept. This is in the time when Kayak.com and Expedia were taking off, and it just made so much sense to me. And here I am in the mortgage business, and I come head to head with the reality of, oh, people don't think I'm good. They think I'm like the scum of the earth. Something's wrong with me. And I was so naive that my ignorance was bliss in a way, because I didn't feel terrible because I didn't know what they're talking about. But I began to go out and meet with real estate professionals and learn about what they were being told about mortgage brokers. Being told that we're the scum of the earth, that we charge exorbitant fees to consumers and cut out the middleman and skip the mortgage broker, go right to the end user, the bank. Like saying, skip Kayak.com, go right to Delta. It's like, that sounds terrible. Go to Kayak.com. But the reason why is because there was this assumption that mortgage brokers charge consumers more money. And as I evaluated it, and obviously like the rest of you, watched The Big Short, I realized, oh man, mortgage brokers were a part of the problem. We weren't the sole problem. We were part of it, and we were the scapegoat, I believe, for the mortgage crisis, and in some parts deserved. Mortgage brokers at the time were uneducated. They were unlicensed, which is terrible. It's like having someone do your taxes who has no certification whatsoever. That's dangerous. Or a financial advisor who's not licensed. We were not licensed or educated. We had no caps on what fees we could charge. So you basically got taken for whatever you could be taken for. Like what I often observe in the car business today, which is why I hate buying a car. So hopefully there'll be reform there at some point. And then mortgage brokers had inconsistency. They targeted lower credit score clients. They targeted, we call them subprime loans. And I'm like, oh, this is what you guys think I do. But that's not the type of loan that I did. I helped the everyday consumer. I wanted to help families and people like me, hardworking young families who wanted to have a great experience and not be taken advantage of. In fact, as a D personality disc profile, my greatest fear is being taken advantage of. And it's the last thing I ever want one of my clients to experience. But I knew there had to have been a change. So at the time, mortgage brokers made up 7% of the total market share of all mortgages in the country. Today, mortgage brokers make up over 27%, and it's consistently growing. And mortgage brokers, the reason why is they save consumers $10,600 per transaction. And for minorities and veterans, over $13,000. Well, why is that? It's like, what's the catch, Mike? Well, because we're not charging exorbitant fees anymore. We were capped by regulation of the Dodd-Frank Act, how much money a mortgage broker could make. So today, mortgage brokers like ClearPath, we make less money per transaction than your local bank and your local credit union. And therefore, clients, the savings gets passed to the consumer with lower rates, lower closing costs. And that's really important. But another thing that's important is customization and personalization. There's been some huge reports. The McKinsey report came out and shared that 71% of consumers want a personalized experience. They don't want the out-of-the-box canned experience. They don't want the one-size-fits-all. We're in the age of being unique and different and dare I say special. But we want something that's unique to us and our families. We want to be treated special. But that's not your typical mortgage experience. You go to your local bank, you're square peg, square hole. You get the product they offer, you get the rate they offer. You either fit or you don't fit. And that's not personalized. And 76% of consumers are coming out saying, we get frustrated when we don't get that personalized experience. So you want a combination for your clients of savings, a combination of options. You don't want them being taken advantage of. You want them to have personalization in their experience. And that's what we do at ClearPath. We're like the Kayak.com, the Expedia of mortgages. People today don't go shopping at Delta.com for their flight. They go to Kayak. And they get to see all the different airlines, all the different scenarios. Do I want to have a layover? No layover. Direct flight. When do I want to land? When do I want to arrive? This customization I personally love when I'm booking a flight on Kayak.com or whatever your favorite is. And I love that I don't pay Kayak. There's no fee to Kayak.com. It's the same way when your client goes to a mortgage broker. We don't charge any fee to your client. We get paid by the banks we work with for overseeing their mortgage from beginning to end. So the next time you got a client or you're looking at your referral list or a client who needs a mortgage, consider ClearPath. Consider a mortgage broker who's going to save them money, customize their experience, personalize it, and make them feel unique and special, growing that referral business for you.